Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, February 18th, and it's around 4:30 New York time. Not a whole lot of economic data going on here in the U.S. The rest of this week, but we will be getting some important inflation data out of the U.K. with core CPI year over year, month over month. CPI year over year expected to rise to 2.8%, but fall by month over month by 0.3%. And then CPI services year over year expected to come in at 5.2%. Not really much going on in the U.S. Some housing start numbers, a 20-year bond auction at 1 p.m. Then on Thursday, we're going to be getting initial jobless claims here in the U.S., Philly Fed. And then to finish the week off, we'll be getting a 30-year tips auction Thursday afternoon. Some retail sales data in the UK, flash global PMI numbers in both the US and the UK on Friday morning, and University of Michigan will be watching very closely these inflation numbers because they were much higher when they were reported in the preliminary numbers about 2 weeks ago. Take a look at currencies. We're going to start with the euro because the euro has a lot going on in it. We've really just been consolidating sideways now, trying to break out for a second time in a row here. And it looks like both times now we've been rejected around this 105.25 region, and that makes me think that maybe resistance has moved up a little bit, and this is where your new resistance level is. Obviously, there's a lot going on in Europe with the German election coming this week, so that's going to largely have a big impact potentially on the euro. But what's really more important here is we stay below this level of resistance. The euro looks to be, maybe trading range bound between this 102 to 105 region. Clearly if we get a breakout, we can start talking about a move back into the 106s and 107s, but for now, that's just not the case. And, clearly you can see momentum has started moving higher, but the one thing that's worth pointing out is that the RSI has stalled out around the 60 level now on 2 occasions as well. So if this is really going to be a breakout and we're going to really start seeing the euro moving higher, we're going to want to see the RSI break out and start moving higher as well. And for now, this 61.8% retracement level around 102 continues to be the key level of support. We have started to see the pound move up. It has broken out above resistance at 125. We were talking about the pound's potential to move higher. It looks like the next major level of resistance doesn't come till about 127. That's obviously going to take, rates moving higher probably in the UK as well. Clearly, momentum has moved higher. You can see the difference between the RSIs actually, with this RSI clearly making a new high, giving us confirmation of this move up in the pound. But for this move to continue, we're going to need to say probably some data out of the UK that suggests the economy is doing well. And, perhaps inflation isn't too much out of control. If inflation's really too high and you have a sort of a slowing economy there, that could really raise more issues around stagflation, which would push the pound lower while pushing rates up. Right now, it seems that we're getting rates to stabilize in the UK region. When we look at the Japanese yen, right now we're sitting at support. This support level right now is around 150, 118. What's noticeable really in out of Japan lately is that you've really seen a very big move out of the Japanese 10-year, which is up to 143, and that's really allowing the spread between the US 10 and the Japanese 10-year to contract again. And this is largely why you're seeing the Japanese yen strengthening versus the dollar. So as long as you continue to see the Japanese yen rise at a faster rate than the US 10-year, then there's a good chance that you can see the yen continue to strengthen. And a break below this 151.25 area is obviously going to be supportive of a move back below 150. Copper prices have pulled back from a really big move up. It's not really surprising that we found some resistance in this 475 region. We were overbought on both a Bollinger Band and an RSI basis, and so now we pulled back to support around 458. If we take a look, you can see that this is around the 38.2% retrace of that. And if we take a little bit of a deeper look, you can see that we're sort of right in between the 23.6 and the 38.2. So there might still be a little bit of further downside here in copper prices, but generally speaking, I think there's been a pretty powerful breakout. You can certainly make the case as there's an inverse head and shoulders pattern here. And if that's the case, then you could make I would think that the pattern hasn't completely played out yet, and there's probably more room to move up. Just because if we were to take it from the head to the neckline, it would suggest more potential for it to move higher still. So I still think that you could potentially see copper move up And this area of support around 450 is going to play key in that. If that breaks, then we're probably going to move back into the 430s, and a lot of this gain is going to vanish. But as long as this 450 area holds, I think it favors copper moving higher. And we're just going to take a look at oil again. Oil continues to kind of fluctuate and hold this area between the 78.6 and the 61.8% retracement areas. You can clearly see that the momentum indicator, the RSI, has turned more negative for oil over the last couple of weeks. But the question is this momentum going to start shifting now? I mean, if we draw, off of this point and this point, you can start making a case the trend is starting to maybe shift. If you draw from here to here, it looks like maybe the trend has broken out. So again, kind of early, but we're going to watch this region really carefully. As long as we stay above 70, I think it favors oil moving higher and back up towards 74. A break of 70 obviously means that you're probably going to see 66.5 in the not too distant future. When we look at the German DAX, it clearly continues to remain in this alternate state of reality compared to what's happening political sense in Germany and what's happening in the economic sense. A lot of this, when you take a look at it, you can see a lot of it really in SAP, which has been the dominant driving force here of the DAX really more recently. It's certainly been one of the big winners, and one would think that as long as SAP can continue to move up, you're probably going to see the DAX continue to move up. But more recently, we've seen SAP start to consolidate, so that could be our first indication that something is about to give. Certainly, when we also look at it on a weekly chart and we take a look at the Bollinger Bands, you can see we're above the upper Bollinger Band on the weekly chart, and we have an RSI of nearly 81. And we look at it on a monthly basis, you can see we're above the upper Bollinger Band, and we're at an RSI of about 80. So there's a lot of overbought conditions currently in the German DAX. And while I'd like to be able to say that there's further upside to this, there very well could be, because momentum is clearly very strong. There's also some very overbought conditions here in the DAX that make you really have to think that we are due for at least a period of sideways consolidation. I'm not saying that we have to see a very large correction, but I'm saying that we would think at a bare minimum we consolidate around this 22,850 area. I mean, certainly SAP is probably the key to this market in terms of what you're going to want to keep an eye on. The UK FTSE, that's also stalled out now that copper's starting to move back down. We had that little rising wedge we were talking about. I had noted it was also in the DAX. It obviously worked differently in the two different indexes, where one broke out to the upside and one broke out to the downside. Although I wouldn't really say the FTSE moving down has been that much of a breakdown, but it has certainly pulled back a little bit. And again, I tend to think that if copper heads lower, then you're going to see the FTSE move lower. If copper moves higher, I think you're going to see the FTSE move higher. And right now you can see that the 10-day exponential moving average continues to hold as support. So I would think that your upside is probably limited to around 88.60 right now, while the 10-day exponential continues to serve as your support level. Although, again, you are seeing momentum beginning to fade with this sideways RSI movement. And that would be suggested more of a bearish divergence, and that could also be an indication that this rally is starting to lose some momentum. When we look at the NDX, you can see that today we moved up to the upper Bollinger Band. This is a new high that we've managed to tick on the NASDAQ 100, but just barely. So again, we're just going to want to continue to keep an eye on these upper Bollinger Bands as if the NASDAQ continues to move higher. It looks like the NASDAQ probably, again, should consolidate a little bit. This is an option expiration week, and I'll get into another layer of that in a minute. But this would kind of suggest that maybe we see some sideways consolidation here in the NASDAQ with support somewhere around 21,850, which is the 10-day exponential moving average. When you look at the S&P, very similar. This is the upper end of the range. 6150 has a pretty big level of gamma, and so that may act as a bit of a headwind for the index over the next couple of days as well. As we head into OpX, you can clearly see that momentum has been trending lower, although we're very close to potentially breaking out, and that would signal another move up. But for right now, I think, as long as you stay below this 6150 region, I think it favors the downside. On the Dow Jones Industrial, you can see that all we've been doing now is consolidating sideways, basically since the middle of January. So the Bollinger Bands are starting to contract a little bit. It looks like the RSI is starting to turn lower. You can see we're really get at a point where the 20-day moving average is about to cross over the 10-day exponential moving average. Watch this 10-day exponential moving average. If the Dow breaks below it, that could be a negative indication over the very short term, potentially set up a test of the lower Bollinger Band around 44,000. While I think the upside continues to be pretty capped at around 45,060. Anyway, hope you have a great rest of your week, and until next time, have a good one. Bye.